makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Far-right leader Geert Wilders secures a dramatic win in the Dutch elections, promising a referendum on leaving the EU. Country Garden leads China's developers higher after Beijing's biggest push yet to shore up the troubled sector. And coming up in our weekly show, Bloomberg UK, we ask whether the Chancellor's tax-cutting autumn statement will actually deliver the growth he's promised. Now let's take a look at the European markets map. It is going to be a little bit thinner in terms of volumes because it's Thanksgiving. To our American colleagues, happy Thanksgiving. There's a lot to try and think about as we get onto, of course, a pretty big 12 months ahead. Now, European stocks are really struggling for direction. If you look at oil, it's extending some of its retreat. We're also getting some euro area manufacturing PMIs. Now, November services PMI actually rising to 48. So it's a little bit better than expected. The manufacturing also a touch better, but it's really marginal. If you look at the services, rising 48.2 instead of 48.1. A reminder, everything that is below 50 is still in contraction territory. So that's the PMI figures. We'll see whether they have a big impact into some of these stocks, but it's very clear that we look at currencies maybe. There are no treasury cash trading today because of the Thanksgiving holiday. Japanese markets were also closed, and so you look at euro and yen edging higher as the dollar seems to be surrendering some of the gains from yesterday. Now, Bloomberg has learned that China may allow banks to offer unsecured short-term loans to qualified developers for the first time. It's the latest big push to ease the property crisis that's dragging down growth in the world's second largest economy. Now, as part of the package of new measures, regulators, for example, are considering allowing banks to issue so-called working capital loans to some developers. The other story, far-right politician Geert Wilders has come first in the Dutch elections in a shock result that will resound across Europe. Now, the Freedom Party leader will now have to forge alliances in order to lead the country. Joining us now is Bloomberg's April Roach with the very latest. April, if you look at the main takeaways, I mean, people are in a bit of a wait-and-see situation, first on whether he can actually become prime minister.
Good morning. Yes, so as you said, Geert Wilders' far-right populist party is the biggest. It's the surprise winner in the Dutch elections from last night. And it was a late surge in the final days of the campaign trail that really saw Wilders rise to the top of the polls. And it's important to note that his party is anti-Muslim and has quite tough policies on cracking down on immigration. And Wilders has also spoken out against sending so much aid to Ukraine. And he's set to get, his party's set to get 37 seats, more than doubling its representation compared to the previous government. Whereas in second place, we see the Green Left Alliance, led by Frans Timmermans, getting just 25 seats, and the current ruling party dropping down to 24 seats in third place. So the main takeaway here is that, we're seeing quite a radical shift towards the right in the Netherlands.
So when do we know, actually, if he becomes prime minister, if he gets a new government? What's been the reaction so far on the ground?
Yeah, so the Netherlands is a coalition country, and Wilders' party has just 24% of the vote. So it really come down to whether he's able to form agreements with some of the rival parties. And those discussions could take weeks or even months. So it could be a while before we know who will be prime minister. However, some of the other parties have already started to sort of open that door towards forming a coalition with Wilders' party.
April, thank you so much. April Roach there from Amsterdam with the very, very latest, of course, on these latest elections, really sending shockwaves across the Eurozone. Now, we did get some PMI figures just moments ago. They may be a touch better than expected, a lot of them still in contraction territory. So joining us now to talk about the European economy, Jason Davies, his global rates portfolio manager at JPMorgan Asset Management. Jason, thank you for joining us. A lot going on.
Yes.
When you look at the economy, this has to do with oil, this has to do with inflation, what the ECB does next. Like, where do you see value in bonds right now in Europe?
Yeah, I think, the general first point I'd say is we quite like to be long duration. So in Europe, you look at the growth and inflation narratives, you've effectively had sort of 3 or 4 quarters now of stagnation. The forward-looking indicators this morning, the PMIs very weak, continued stagnation there, maybe a slight bounce back. I think we'll stay around that level. I don't think we're going to plummet into recession in the near term, but I do think there's weak growth. And then you look at the inflation angle, and that's where most of the progress has come. So over the last 3 months in Europe, inflation's been running around 2.5%. So we really think the fundamentals are there, the backdrop for buying duration is there, and then you just look at valuations. And I think you look across the spectrum of bonds, whether that's in the US with 2% plus real yields, or in Europe, 2.5% to 3% bond yields. I think we'll look back on those levels and say they were quite attractive in hindsight.
I mean, I guess hindsight is a beautiful thing. What are you expecting the ECB to do next? I mean, again, this is a difficult calibration exercise.
Yeah, I agree. I think most central banks are actually on the same page now. I think that they've gone from how high do we need to go to how long do we need to stay here for. And actually, you look at what central banks are saying, they're probably under the hood quite encouraged by the move in inflation, but they're not going to declare victory just yet. I do think the ECB are done. I also think the Fed are done. But when they start to indicate cuts, I think they'll need to see inflation moving back very close to 2% in the rearview mirror.
But how much pain can they actually inflict on the economy by getting to, inflation at these levels to that 2% if they really stick to 2%? Yeah,
I think they probably will stick to 2%. I think that, in our base case, we actually see, if commodities stay where they are, the Eurozone inflation trajectory reaching 2% by the middle towards the end of next year. So I think, job almost done there for the ECB. I don't think that they'll move too quickly. I think they will risk, causing worse economic growth because you've had this huge surge in inflation over the last year or two, and they don't want to be too preemptive in cutting rates. So they aren't going to hike rates anytime soon, but they're also not going to indicate cuts for the near term.
Jason, we also caught up actually with Mr. De Guindos of the ECB, and this is what he had to say about inflation and interest rates.
This is one of the main risks because now the outlook that markets are taking with respect to the evolution of the economy. I would say that it's a little bit sanguine and so optimistic, and there is a little bit of wishful thinking.
I mean, I guess it's inflation concerns. It's also, how long it takes for a lot of the tightening that they've done so far to get into the real economy. Is there a danger, Jason, that this will come, everything at the forefront at once and that we see a severe downturn?
Yeah, I think the financial stability report that we just heard about there really focused on the impacts of those rate hikes. Yeah. And what we're concerned about in Europe is you do get that non-linear point where labour markets start to deteriorate quite quickly. I'd say the one hopeful point would be that real incomes are going to start bouncing back. Eurozone consumers have been quite cautious. Savings rates are a lot higher, and as wage growth remains quite sticky and inflation comes down, that should provide some tailwind to the economy. So I don't think that you're going to see that big non-linear event happen in the near term, but obviously there's a risk. The longer you stay here, the more likely that will happen.
Jason, what do you see as, and this could really be anything, as a black swan event? I don't know whether high oil prices or geopolitics or something that kind of gives us a little bit of a jolt will be considered a black swan event, but what do you worry about?
The thing that keeps me up at night the most is probably a re-acceleration in inflation. Our base case is that we've seen the supply side impacts of inflation come out. We've also started to see the demand side of inflation come out. We don't think that last mile will actually be that difficult. But if we do get that re-acceleration, not only will central banks have to go again, but that could cause ongoing growth weakness, which would really send economies into recession. So my concern, the thing that I think will be the biggest pain trade for markets is if 2024 is another re-acceleration, another oil shock or another commodity shock.
And what's your take on the UK yesterday? So we spent a good amount of time talking about the autumn statements. Yeah. Again, I don't know whether it's inflationary, and I don't know whether it actually spurs the growth that the Chancellor promised.
Yeah, I think effectively there was about 30 billion of headroom, and they used about half of that. So they've got a little bit more headroom as well in the spring budget. What I would say is we saw fiscal policy as being a tightening impact next year in the UK. I think what that's done is taking that away. So it allows growth to avoid falling further into recession and weakness. And I think that if you look at the UK economy again, the fiscal policy there helps you avoid that big downturn. But we're even in the UK seeing progress on inflation. We're seeing double-digit wages and double-digit services inflation come down to sort of 5 to 6%. Still very high, but the progress is very encouraging.
Yeah, it's not enough for the Bank of England. We'll talk a little bit more about that. Jason, thank you. Jason Davies, there, Global Rates Portfolio Manager at JPMorgan Asset Management, stays with us. Now, coming up, the leaders of Germany and Italy say they're making progress on negotiating changes to the EU's strict fiscal debt rules. More on that story next. This is Bloomberg. changes to the EU's strict fiscal debt rules. Now, it comes as Germany also indefinitely suspends a vote on the country's 2024 budget after a court ruling that blew a €60 billion hole in the government's finances. Well, joining us now is our Bloomberg executive editor for Europe, Chad Thomas, still with us. Also, Jason from JPMorgan. So, Chad, great to have you here because there's been so much going on actually in Germany and elsewhere. First, this budget ruling, I feel like it kind of, if not coming out of nowhere, there are many question marks on how Germany will deal with this going forward.
Yeah, so the dirty little secret, Francine, in Germany is they've been preaching fiscal discipline to all of Europe for years. And all of a sudden we realize, oh, Germany had about 800 billion in off-budget funds. And this is how they've been financing a lot of the things that they do that aren't in the specific annual budget. And basically what we saw last week is the Constitutional Court saying, you can't do this. This is unconstitutional. And now we're in a budget crisis. And this was just as they were about to pass the budget for 2024. That process was supposed to be playing out this week. And they're going to need to retroactively make changes in the budget that we're in now this year. So they're in a real mess. And all of the coalition parties, they can't agree on the path forward.
So this is problematic, one. But can actually German, could they have afforded what they wanted to put in place? So does it automatically just put them in a different space to some of the southern European countries?
Well, part of the issue is that they have these constitutional limits on spending. And this was put in place because, as we know, Germany tends to want to preach fiscal discipline. And in order for them to spend more money, they basically have to suspend these rules and say we're in an emergency. They actually did that during the pandemic, and they did that for the energy crisis. But the finance ministry, which is led by the FDP, the liberals in the classic sense in Germany, they really wanted to return to this fiscal discipline. It looks like they're not going to be able to do that. So that really is a challenge for them. It's a big challenge for the Greens because a lot of the spending things that they want to do around the energy transformation, climate, tackling climate change, all of that is in question now. It's not that there won't be money for the annual budget, but these things that are long-term transformational things that they've been talking about wanting to do in Germany, where will that money come from is really in question. No one has an answer at this point.
But so, Chad, I guess the concern is that, first of all, if there's no path forward, you don't really know. Germany is not used to this kind of stuff. And it also comes at a very difficult time for Europe. We have many elections next year. There's a European Parliament election, and then we had this shock election in the Netherlands.
Well, I think the concern is Germany now is going to be very inward-looking while they're dealing with this problem, as you say, Francine. And so as they focus on that, all these other issues that we have going on around Europe with the European Union, with the continued war in Ukraine, those are things that Germany isn't going to be focused on as they try to sort out their own fiscal house. As you say, we had a shock result in the Dutch vote today. We did see in the final polls that Geert Wilders was leading, but no one expected this big of a win. And now you start a very difficult coalition negotiations in the Netherlands. They're famous for having these coalitions with 5-6 parties in it because there's so many parties that
Italian style.
It's very Italian style, isn't it? Italy seems to be the one who's stable at the moment.
It is actually incredible. And a serious note, I was also speaking to someone from PGIM who wrote this note just last year saying Italy is Europe's sleeping beauty. And then you see the rating agency actually quite liking, for once, what they see. Let's bring back Jason Davies, also portfolio manager at JPMorgan. It's quite incredible to look at Germany and Italy. I don't know whether, what you buy in Germany right now, or whether you just kind of stay away, given all of the uncertainty.
Yeah, I mean, I'd say two things. The first one on Germany is that, internally we calculated roughly next year about a 40 billion hole from what they said they'd do. Now, Germany don't always spend what they say they'll do, but that for us makes the supply picture a lot better. So actually, if you're looking to buy duration, Germany wouldn't be a bad place to buy. But going back to the Italy point, I do think actually that for the next 2 or 3 months, we could be in the sweet spot for carry because you've got inflation coming down quite sharply. You've got a central bank and the ECB that don't want to hike rates, but they also don't want to cut rates in the near term. They're trying to dampen implied volatility. So for all of those reasons, and the fact that people are quite nervous about Italian issuance as well coming up, we quite like to be long Italy as well.
We also have, Scholz, it's almost like we planned all of this. Olaf Scholz and Giorgia Meloni, will meet talking about new EU fiscal rules by year end. Is this a game changer for Europe?
I think what the change here is that because of the situation that Germany is in, they're much more willing now to look at loosening these rules. Italy has been pushing this, and some of the other southern European states have been pushing this for some time. Germany has been a bit of a holdout, and all of a sudden they realized, it might benefit us as well as we look at our fiscal picture to be a bit more flexible here.
Yeah, and of course, Jason, the EU Stability and Growth Pact, right, which basically limits these debts and deficits that bind the Eurozone's economies, which are pretty eclectic, I would say, was suspended during the pandemic. Does it change, once again, on how you look at, the economic pattern of these eclectic economies?
Yeah, I think that the first thing to say in the specific case of Germany, it's actually their own rules that are hamstringing them to some extent. So I do agree, though, that there's certainly an element here of, meeting in the middle now that they've not able to use those funds. I'd say that going forward, there will be rules. I think they'll be less onerous than they have been before. But we think that, fiscal policy is going to tighten next year. We've had this huge amount of fiscal stimulus over the last 2 years. And whether the rules come back in January or they're not organised until the middle of next year, we still think there'll be pressure for economies to tighten budgets.
Jed, we know the two leaders wanted to cooperate more on, I think, energy, defence, migration. What does Germany need from the rest of Europe right now?
Germany all of a sudden is the one who isn't looking well economically as well. And so I think that you'll see Germany more willing to budge on things with the rest of Europe. And now we're going to need to see the rest of Europe being willing to budge with Germany as well. But I think what you see is this interesting relationship developing between Meloni and Scholz, which I don't think anyone would have expected when Meloni was elected. They're kind of on opposite ends of the political spectrum. But even around migration now, they seem to be agreeing that they need to, within the EU, take a sort of harder line on this. So,
where does that leave the Franco-German axis?
It does seem a little bit like things are shifting a little bit between Germany and Italy at the moment, and even this discussion about Italy blocking the purchase of a company, a subsidiary of a company in Italy that had an effect on France. And Scholz said yesterday that it's within Italy's right to do that. It was telling.
Thank you both for joining us. Jason Davies, Global Rates Portfolio Manager at JPMorgan Asset Management, and of course our very own Executive Editor for Europe, Chad Thomas. Now coming up, Novo Nordisk's big French investment, more on the pharma giant's production expansion plans as it struggles to actually meet demand. This is Bloomberg. Welcome back to the Pulse. Now, Novo Nordisk is to invest 2.1 billion euros to expand production in France, creating at least 500 jobs. The Ozempic and Wegovy drug manufacturer has been facing supply bottlenecks, mainly due to high demand for its weight loss medicines. Now, their share price, let's look at this, has risen by more than half this year, making the company Europe's most valuable. So let's get more now from Sam Fazeli, Director of Research for EMEA at Bloomberg Intelligence. I've been waiting to talk to you about Novo Nordisk for a long time. I'm so excited to have you on. First of all, why did they decide to invest in France? Is it they just can't keep up with demand?
The second part of your comment is absolutely the case. Why France? I'm pretty sure that they were out looking for some state aid, I hope, or some reason to specifically to one country versus another. Now, France, as good as any other country, it's got a very strong pharmaceutical industry. So, but this is needed. They just can't keep up. The more they make, the more they sell.
I just find it incredible. I mean, I remember like a couple of years ago, they were an okay company. They were considered a little bit boring, and suddenly, like the most valuable in Europe. How much more do they need to produce to make sure that they meet demand?
They can sell whatever they make. So that's the problem. There is incredible demand. We've just worked out, my colleague Michael Shah, who's been doing lots of in-depth analysis on obesity, has just worked out that even if you get up to 11% of or 10 to 11% of the obese population, you're already at about an $80 billion market. It's enormous. I mean, it's enormous.
Sam, I mean, every day we hear about side effects. Should we worry about the side effects? Is there something that actually, when looking at what's released, that you worry about?
People worry about any side effect of any drug, and there are no drugs that have no side effects. It just doesn't exist because you're pushing biology in a direction that is not the status quo. The thing is, it's all about risk-benefit. What is the benefit that you're getting by reducing weight by 20%, 25%, versus the few that might get a side effect? Remember, it's pretty much the same story as we talked about for 2 years, COVID vaccines. Yeah. They have side effects, but the benefit is much higher.
Sam, as always, thank you so much. Sam Fazeli there from Bloomberg Intelligence. We'll have plenty more on Bloomberg UK. We're joined by Jim O'Neill. This is Bloomberg.